1 hour time frame, like you want to draw your fib out on a 1 hour time frame. Okay. If we're in a downtrend, you want to draw from the relatively equal highs to the lows, and in an uptrend, you want it from the relative lows to the highs. The only time we draw fibs on a lower time frame is when we're looking for an OTE, which stands for optimal trading entry. And that's when you draw your fib for a quick swing from the high to low or the low to high. Okay? That's what we that's called OTE, optimal trading entry, yeah. Alright, bless. Cool. Alright, cool. So right now I've got gold up on my charts. First thing we do, we start from the 1 hour time frame. Yeah, we start from the 1 hour time frame. Now here's how you draw your zones. If we go to you know, like where you see your candles, like when you got like the candle chart, like when you could change it to like hollow candles, HN&K candles, you want to start, it says line, where it says line, you want to start that, and you want to change your candles when you're doing your zones or your key levels. You want to change it to line, so it should look like that. And I'm going to show you why. Remember what I said at the beginning, price always respects the wicks, always respects the wicks. So we want to change it to the line, okay? And then this is how I approach the charts. And once you mark these up, you genuinely don't even have to remark anything else up, probably for the whole week, unless price becomes very aggressive and starts to make new levels, if that makes sense. So on the hour time frame, we're now on the line chart. You then get your horizontal line tool, and you want to start scoping out the wicks, like the sharp edges where the line chart is, and then you do it like that, where you can see it bouncing off and being respected quite a lot of times is how you scope it. So here's another one. As you could see, bounce, bounced, bounce, yeah? And you genuinely just come down on the charts and you keep scoping these lines like that. And I'm going to show you. Okay, so let me just draw a few examples for you. I'll draw some examples. And then I'm going to show you how it looks. Just cool. It's another line. Let's just draw here. All right. So now we've got the line chart, all the information that I've already told you earlier. And now you've got your horizontal lining up with the sharp, jagged bits. That's going to be wicks when we turn it back to candlestick patterns, all right? So now, when we turn back to the candlestick patterns, you're going to see how it starts to look. Now we switch back to candlesticks, okay? Now, let's just say, the latest downtrend on gold, we could see how it wicked past the key level, but it hasn't broken it because the candle closed underneath the key level. So even if the candle is halfway through the key level, it hasn't broken it because the next candle closed below, retest the key level, and then to come down. So it was trying to make the ceiling the new floor, but it couldn't break it. So it stood as the ceiling. It was still the ceiling. So I'm going to show you lot how to move So after the key levels, I'm going to show you lot how to scale down in time frame, so how to look for entries. Okay, so how you do that now is, if we go to the latest downtrend, which is up here on gold, the first thing you lot want to do is get your rectangle box. When we're entering key levels, when we're entering the key levels, you want to draw out just a box around where you could see, you know, the candles bouncing off the key levels. And even though this just looks like one long wick, when we drop down to the 5 minutes, it's going to show us so much more information, and I'm going to show you what I mean. Okay, we drop down to the 5 minutes now. Okay, now we can see what I'm talking about. Now we drop down to the 5 minutes, we could identify the area of where we marked out, because we put our rectangle toolbox around that whole play. Okay. Now, I actually caught this trade on Friday because I see price wicking up, but respecting the key level. If you could see, if you look closely at the high that was made on Friday, it wicked past key level, but not once did we have a full body closed candle above the key level. Not once. Like, it went up, came down, closed below key level, went up, closed below key level. So the next thing you have to bear in mind is that if there's no retest, there's no entry. No retest, no entry. Like, that's what you have to keep in your mind. So what I did when I saw this is, when I was on the 1 hour time frame, I drew a fib, and I believe you lot all have the settings anyways. I believe you lot have you know, the Arimi settings of the fibs, so we never have to change that. Okay, so you see the high that created this low. They're predominantly all the same anyways, but I went for the most, you know, like the high that created the low. And you don't have to like draw your fib to make it messy, like, you know, like some people draw it and they leave it on like this. You don't have to do that. All you have to know is where the high is to the low, if we're looking for a down, you know, for a downward trend. And we just draw it literally beside the data on the candle. So we could draw from this high. We know that it's this high. So we literally draw it from the high all the way to the low. Okay? Like that. And then now, that's our whole play. This is all premium. So taking shorts anywhere in between this zone whilst looking at the right play is all valid. Like, we're in premium. Only until we get here, which is equilibrium of the actual of the fib, that's when price is at a fair price. Now you're gonna have the sellers and the buyers just battling it out. This is where, as hustlers, bro, we never wanna trade from equilibrium, because equilibrium, like, we're not getting a deal. From a hustler's perspective, we only want to sell when we get in value, which is in premium, and we only want to buy when we're in a discount. So this is why a lot of people get chopped up in between the charts, because they're trying to buy and sell at a fair price. You're going to get chopped up in the charts. So that's another thing that we, you know, we like to draw out on the charts. All right. So once we have that, this is where, whilst drawing key levels, the smart money concept and retail theory comes into play, because you have key level as a confluence. You have your fibs telling you that you're in premium or discount as a confluence. You're seeing the zones being respected time and time again. So whoever said you can't use zones that's been mitigated is crap. Because if you look at these big plays, you're telling me that you would have missed this play because it's been visited once. Yeah, that's 470 pips. That's a $47 move on gold. You would have missed this play. You would have missed this play. You would have missed this play, this play. Like, I love seeing things like this because that's showing me that that's an extremely strong zone that's being respected so many times. So unless you know, like any like red folder news comes to break to make that new zone, I know that this is a great zone to trade from. Same thing, prime example, what we had on Friday. You know, we wicked the zone, candle closed below, respected again. That's been respected. This zone has been respected 1, 2, 3, 4, 5, 6 times. Like, you could have caught mad plays in this whole zone. Like, probably like if you did 5 to 10 lots on gold and you caught these zones, you would have been like 150 bags up right now. Like, that's how crazy it is. Like 150 bags, because a $10 move on gold with 10 lots is 10 grand. So these zones that I'm showing you that's being respected time and time again, like this whole move down to here, that's $47 move. That's 47 bags if you've done 10 lots on gold. And then you see it respected again here. Like, just keeps being respected. That's a $21 move. That's 21 grand. Like, it's crazy. So basically that's what I do. I draw out my fib on the hour, swing high to swing low, or vice versa, swing low to swing high. And then how you use the smart money concept theory. How you use the smart money concept theory is now you want to add on extra confluences. So we got our key levels that's being respected. We got our fib. We now want to draw support and resistance. And then we draw supply and demand zones within the key levels, which gives us extra confluence. Like, you want to draw the support and resistance and the supply and demands, as well as the key levels. Like, these things are all extra confluence to add to your strategy. Like, it adds to your strategy. I'm not saying change your strategy. All I'm saying is that if you could strengthen your strategy with extra confluences, like the same way some people use technical analysis, and then they might say, okay, cool, let me learn about the fundamental sides of trading as well. So not only are they doing technical analysis, they're actually knowing what the news is actually doing to drive the price of the market, which is strengthening their methodology, like behind the charts. It's like the same thing. So, like, you want to draw like support and resistance lines, like, so you could draw it out like that from the, like, on the top of the candle. This is a zone, this whole zone here. This is a whole zone. That's a whole zone. Another zone you could draw, where you could always, where you see it bouncing, being respected, is here. You could draw this out as a zone. This is support and resistance. I'm going through the whole thing. Yeah. Support, resistance, supply and demand, the lot. This is another support and resistance. Like, what makes you more comfortable to take these trades is that you're not just working off support and resistance. You're waiting for a schematic to play out on the charts, and this is just giving you extra confluence. Not only do you have key levels, you have support and resistance. You have the fib telling you a certain, information. You still look for your coaches, your bosses. Do you know what I'm saying? Like, there's loads of things. Like, within the support and resistance and key level, like, what can we even see here? the area of supply. And it doesn't matter if it gets induced. The reason why I say that it doesn't matter, because what's the first thing? Like, it doesn't matter if it gets induced, because I told you that you don't take a trade until you see candle close below. So it doesn't matter if it's being induced. So we draw out this. That's a level of supply. That's a level of supply. That's a level of demand. That's a demand level. Now, when we draw out all our chart drawings has to be done on the hour. And when you're looking for a trade, you want to, drop down to the 5 minutes, as I said. Like, no retest, no entry, no retest, no entry. Now, like on the hour, for instance, if you look at, where was it? Wait. So it'll be on the hour. Oh, sorry. Oh man, sorry. See, this is on the hour. Now, if you mark this out and highlighted it, you highlighted that and dropped down to the 5 minutes if you was looking for a buy, yeah. You can see it again, like price touches. What's it saying? It's running out of time already. Price touches, revisits the wicks. No candle close below. There's no candle close below. You could have took this trade knowing that we swept the low of previous day, knowing that we're creating the schematics to show us that we're going back up. Same again. Like when it breaks through this key level, what happens? Break, retests, like retests. We're retesting, but we're not closing below. That's another trade. These are big boy trades, guys. Like, it looks small, but remember, we're not using the 1 hour time frame. We're not using the 1 minute time frame. So they look like small plays because we're on a bigger time frame. But this is like nearly a $6 move alone, just that whole swing. Now, if I was to go to the 1 minute time frame, that would look huge. Like, look at that. It's a crazy play. Like, that would look huge on the 1 minute. But 1 minute's a lot of noise, and sometimes you have to be very seasoned to use the 1 minute time frame because you're seeing a lot of information which could cause anxiety, and anxiety will cause you to blow your account, or fears of missing out because you're just seeing too much information. You're being fed way too much information. So 5 minutes for your entries, 1 hour for your markups. And on the 1 hour, when we see it visiting key levels, you literally just draw a rectangle tool around the wicks. And then when you go down to the 5 minutes, now you're being fed the right information if you want to take your buy or sell. Do you know what I mean? So now that we're on the 5 minute and we've got a 1 minute supply zone, I would have, personally, after I see it wicking out here, I did take this sell. I did take this sell, but after I saw it wicking out here, I took my sell. But I had more than 2 confluences. I had, okay, we're deep in premium. We're candle closing below key level. We're in an area of supply on the hour. We swept the previous day high. This is giving me every single information I need to take this sell, and I actually took this sell. And then we revisited another key level. This is how you start scaling in with your entries now. Like, you start scaling in with your entries. Like, some people add to their lot sizes. Just wait for the pullback. key level again. Look, it wicks past, but candle closes below. Once candle closes below, we have a retest of key level. I would have slapped on another entry there again. Is someone saying you're not in? No. Yeah, guys, so basically, it's not a lot of information, but that is the way I trade, guys. Ladies and gents, I don't know who's in it, but yeah, that's basically, bro, I don't overcomplicate it. I mix the support and resistance with supply and demand. You obviously want to go with the trend. I draw my key levels and I see them getting respected. I drop down to the 5 minute time frame and I fire off. That is how I trade. I don't overcomplicate things. And it's crazy because I've traded for 3 years and learned so much stuff within those 3 years, only to simplify my strategy to the bare minimum. It's weird. It's like you go through so much stuff only to fucking use 4 to 5 things, like 4 to 5 confluences. But we learn so much in between. And that is basically my model, guys. Like, that is how I trade. And I've been slapping off, and proof's in the pudding. Like, I'm not just a person or some fucking fake guru that's showing you stuff of how to trade. Like, I'm valid. I've got payouts. I've got payouts on live accounts, funded accounts. So I'm speaking from a valid perspective. Like, I'm not one of these guys that can't show payouts on fundeds or payouts on lives. I show time and time again. So it's not a fluke. Like, this is genuinely how I make my bread, and this is how I trade day in, day out. And once you draw your key levels, I promise you, it takes so much anxiety off the charts. It takes so much anxiety off the charts, yeah, because you don't have to keep redrawing your key levels. They could be used time and time again because you don't care if the market goes up or down. It's not a thing where, oh, that's been mitigated, let me take it off my charts. These key levels be respected. If you go back, well, we don't have enough market data to go all the way back. Depends what premium you're on TradingView. Like, we don't have that much, but if you go all the way back to 1970, you will still see key levels being respected from then. Like, do you know what I'm saying? Like, from 1970s, key levels have been getting respected from then. Do you know? So someone said, you wait for a candle close below, then press or buy, then sell above wick. Yeah, so we wait for a candle close below the key levels. You want to see it wicking. You want to see it wicking because now it's showing you that it's exhausted and the key level is being respected. So when you drop down to the 5 minute time frame, that's when you could take your entry. It's literally that simple. I think this is running out in 3 minutes as well. But if anyone's got their mic on and want to fire off some questions, let me know. This is my first ever Zoom call, so if I'm moving a bit shaky, you lot, you get me? I'm just...
Yo, Dada.
Yo, bro.
Yeah, where would you put like your stop loss?
So your stop losses would be above the wick. It will be above like this high because you're not worried if it's coming to hit your stop loss, because on the smaller time frame, you're seeing ample amount of candlesticks closing below. Do you know what I mean?
Yeah.
And you're not just working with that confluence, you're working within supply zone, key level, you're working with the premium on the fib. Do you feel what I'm saying? Like, you're working with a lot of confluences. It's not just like, you know, you see a touch of key level and you take a sell. And then, you know, we could see the confirmation on a downward trend. We have a pullback to a key level. We respect it. Candle close below. I would have took another sell, knowing that on the hour chart, I'm within the 78 range, 618 range, 100% range. Like, the only time I won't really want to take a buy is when we're at equilibrium, which is like the 50% of the fib.
Okay.
Someone says, do you enter when you see price wicking or wait for the 5-minute candle close? I wait for the 5-minute candle close, bro. That's the reason why we scale down in time frames, is to see the information being fed on the 5-minute time frame. Has anyone got any questions or any other questions? I think the time's running out. Yeah, this is any pair, bro. This is literally what institutions do. Institutional traders don't care. Institutional traders don't care if it's a bullish market, a bearish market. All they want to know is their movement in the market. They don't care. They just want to see the right schematics play out. They just want to see the right schematics play out on the charts. Like, that's it. So yeah, like, this is how you run confluence with key levels, with supply and demand, support and resistance, with the fibs. Like, this is what you do. I'm not saying change your whole pattern of trading. I'm not saying that. What Urimi teaches is amazing. I've learned that. Like, I'm not saying to change like anything or sway you away from anything. All I'm trying to show you is that if you draw the key levels as well as the information you already know, it just adds confluence to your strategy. That's all I'm saying. Like, I'm not saying to like flip your whole strategy on its head. I'm just saying that that's how you draw your key levels, and you run it in confluence, and it gives you more information of how to take your trades.
Yo, bro, just a quick question. Can we restart the call just so if anyone does have questions, they can ask them just very quickly?
How do you do all that?
So you just end the meeting and then restart it.
No, I don't mean to do it. I mean, there's a kind of like front line. What's that line in the middle of the candle?
Oh, that's going through the candles.
Yeah.
Oh, that's an EMA. That's a it's called EMA exponential. That's what it's called.
So how do you do it? Like, what's called?
No, it's just an indicator. It's called EMA exponential. So if you go to your indicator, it's called EMA exponential. That you could just add it onto your charts. It's like, basically it shows you like when there's like driving force. So it's like if the market is bearish, and the EMA line is above the candles, is showing you force that the market's going down. So it kind of acts like a support and resistance, like, if that makes sense. Like, I'll give you an example. Can you see that when we went down here and then we turned bullish, the EMA line started going underneath the candles? Can you see? And it's like it's showing you that the bulls are in control, basically.
Oh, okay.
And then once the EMA switches and goes above above the candles is showing you that
Bearish control.
it's showing you that there's a lot of selling pressure. So do you know what I mean? Yeah.
Sorry, bro. Can I ask you a question?
Yeah.
Yeah. So like you said to scale down to the 5 minute. Can you show us like an actual entry of how you would enter?
Okay, how I would enter, yeah. Okay, so let me tell you this one. So this is how I entered this short, yeah, because I actually shorted it from here. So
yeah, it's fine. You can show us that. It's fine.
Yeah, I didn't have the supply zone there as I saw it by eye already, if you know what I mean. Like I didn't have to draw it on the charts, but I did have the resistance because I seen that we had the bounce play here several times respecting it. So I knew this was like a ceiling. So I had the fib exactly where it is now. I had the fib exactly where it is now, which was showing me that we're above the 78%, so we're deep in premium. Like we're deep in premium. So all I did was, sorry, I had to move this thing. I can't get my, oh yeah. So I literally just drew my rectangle tool, and I drew it over the wick. Once I drew it over the wick, I dropped down to the 5 minutes. This should show me all the information I need. Bearing in mind, I know that this is a strong resistance, like a strong supply area, and we're above 78 on the fib, which is showing me we're deep in premium. And I saw this candle close. This you see this wick here?
Yeah.
I saw this candle close. We retested. I still didn't get in there. I see a candle close again, and I knew that if I bounce off of this again, I'm just taking my sell. And I literally read it. I think I read it like, so it was something like this. Like after I saw that we wasn't breaking the zones, I literally pull it above here, and I went. I think I read it for. Yeah, I came out here. I came out here on my live account. That was literally a $25 move, 250 pips I got off that move.
Yeah. Bit of a personal question. You don't have to answer if you don't want to, but
Yeah,
obviously I see you had a 4 pip stop loss almost on that trade. So how many lots did you put on that?
Oh, that was just one lot. That was just one lot. Yeah. Because like everyone has different trading styles that's kind of suit who they are. And bro, like for me, trying to have like a couple of pips as a stop loss, what I found personally was that I was on the right side of the fence on the trade, but it hit my stop loss and then went my way. Do you get what I mean?
Yeah,
I'm
sure
like I'm sure there's plenty people that could relate to me on stuff like that. Like literally, bro, like I used to go into the 1 minute time frame, like, and then it would like pinch my stop loss and then go my way. Do you get what I mean? And with that, bro, what that starts to do, if you take like 2-3 L's back to back, like 2-3 losses back to back here, eventually it's gonna affect you, bro. Like it's gonna affect.
Yeah, definitely.
It's gonna start thinking, like, raw, do I even know how to trade? Or shit, like, am I doing the right thing? Like, what am I doing wrong? And you're not even doing anything wrong. It's just a slight adjustment that you need to make. That's it. Like, give your trade room to breathe, because you might be on a sick winning trade and you got just wicked out by like a pip or two. So if you want to know how to combat that, bro, like literally, if you got a bigger stop loss, just scale down in your size. It's no problem. Like, just scale down in your lot size. Yeah. So if you're used to doing 2.5 lots, for instance, on gold, and you got a bit of a bigger stop loss, just say, do you know what? Let me go to one lot. Once I go to one lot and I see that my trade's actually playing out sick and is going all right, I could add more positions. I could add more positions on the continuation model, on the pullback, or if I see another, once I get a pullback and it leaves an area of an FVG, do you know what I'm saying? An area on FVG. Someone says, sorry, would this strategy work on BTC? Bro, it's not, it's a strategy, but it's not swaying you away. It's not swaying you away from your strategy, is what I'm trying to say. It's just a confluence on top of your strategy. So I'm not saying like, forget everything you learn, because bro, I learned the same as you. Do you know what I'm saying? Like, I'm not saying so. I'm just responding to someone that wrote that in the message. Like, yeah, I'm not saying like, sway away from your strategy. You're doing exactly the same thing, bro. All I'm trying to say is that learn how to draw out your levels, because your levels are going to make you see things a lot more clearer than just working from a blank chart. Like, that's all I'm saying. I'm saying add more confluences. You can't go wrong by adding more confluences. Like, you can't go wrong by adding more confluences. It's only going to strengthen what you already got going on. Do you get what I mean? And yeah, it works for BTC as well, bro. I caught just working off the key levels, bro. Honestly, I think it was a 5,000 pip move on BTC, bro. Like, on BTC, a 5,000 pip move just running off of that. Honestly, so
just one last question, bro, if you don't mind. So you know, on this chart right now, so you had it at this, you had it marked out as all the different levels for the fib tool, right? So if, for example, you entered at the 7-8% range, so like below, so if you go back to the 5 minute, so if you go back to the 5 minute, and then you see the line where it's, I think it's trying to see 2515 roughly, that area. So if you wanted, so for example, you started, you traded at the high, right? So just below the 100 mark. So if you saw like price being retested, but at the 7-8 level where that is now, where your cursor is, could you show us a trade like from that position? If that makes sense.
This position,
Like the 2515 area, basically.
Yeah, like just like the 78 and the fib sort of area,
yeah.
Perfect. I could see one right here. This is on the 5 minute, yeah? All right, cool. Area of supply. We have an area of supply. Within the supply, what do we have? 1 second. Within the supply, we have an imbalance. Can you see that there?
Yeah.
We have an imbalance. Where does price fill? The consequential encroachment of the imbalance. That means, sorry, 1 second, Mason. Yeah, the consequential encroachment of the imbalance is 50% filled. Look how it fills it perfectly. It fills 50% of the imbalance. Like, so we got a supply. We're within the 78 range. 50% of the fib was filled to the T. Can you see that there?
Yeah, I can see it.
Yeah, like that's the start of the imbalance. It comes up, fills 50%, drops to the floor. I would have took that trade, bro. That's an OTE level.
Yeah.
On
that, you would have basically either, would you have gone down to the 1 minute then and just seen what was going on, or just stayed on the 5 minute?
I would have took this trade because I knew that because like, you know, when you get to that stage where you don't have to always draw stuff out on the charts, you could kind of like, I don't need to like, I see it. Do you know what I'm saying? So I would have saw that we're in a supply zone. Yeah, we got a supply zone. We're in an imbalance. We filled 50%. We're at an optimal trade entry level. Like that. Bam. Look at that. I saw this all by eye. Do you get what I'm saying? The high to the low before the reverse. Where does that fall? Bam, on the 618 golden ratio.
Yeah.
Taps it, closes below the key level, dumps. Where does it reverse? Deep in discount. Do you know what I'm saying?
Yeah, no,
Like,
that makes sense now.
yeah, bro, like that's like, but I see all of this by eye now. Do you know what I mean? Obviously, it took me a long time, but this is what I'm seeing when I'm not drawing certain stuff on my charts. Do you know what I'm saying? But that's what I'm saying. Like, we're not swaying away from what we already learned. We're just adding more confluences. We already know about supply zones. We know about premium and discounts. We know about the imbalances. Price really likes to come and visit the 50% of the imbalance all the time. Like the CE levels, consequential encroachment, that's what it's called. That's the 50% of the fib. It fills it, dumps, retests his key level, carries on dumping. Candle closed below, dumps again. What happened here? We're wicking. Candle closes above, carries on going higher. Do you know what I'm saying? So
Yeah, no, that makes sense, bro. Thank you.
yeah, my brother. So someone said, can you do it on another pair? Bro, I'll be honest with you, this is my first Zoom. And it is kind of long to draw out everything I just done. But now if you lot want me to do more Zooms, I'm more than happy to. I see someone in the chat saying as well that he's doing this Zoom to kickstart his Discord. Bro, if you see how much people I have requesting to join Discord, I don't give a shit, bro. It doesn't. Nah, I have to be real. Like, it doesn't change anything I'm doing. Like, do you know what I'm saying? I'm just giving back to the community because Urimi helps me a lot. You know what I'm saying? Like, he helps me a lot. But so I'm not gonna not know certain things, and brothers and sisters and whoever's asking me certain things, and I'm not gonna gatekeep what's making me money. Do you know what I'm saying? Like, there's no, like, yeah. So I just thought to hear that, bro, because I'm making money regardless. Like, you know what I'm saying? So I'm just trying to uplift the community. If I could help more people make dough, why not, bro? I'm not no gatekeeper, bro. Do you know what I'm saying? So yeah, I just wanted to address that person still. I don't know who that was, but good luck to them. If they're gonna have that mentality, bro, they're not gonna get nowhere. Do you know what I'm saying? Yeah, but yeah, that's basically everything, you lot, man. If anyone else has any more questions, I don't really want to do it on another pair. It's kind of long, I'll be honest with you, but I promise you, key levels, that's how you do it on every single pair. I think I even done it on BTC. Sorry, one sec, let me see. Sorry, not that one.
Sorry, not sure if you can hear me, but if it's recorded, can you send it to me? Please.
I'm not sure of this. I'm not sure if one of the brothers or sisters recorded it, but I didn't personally, bro. As I'll be honest with you, this is my first Zoom call ever, bro. Like, I've only like jumped on Zooms when like Urimi has done them, but me hosting one, my first ever, bro. Wallahi, this is my first.
No, I respect that, bro.
So I don't even know how to use this. Like, I'll be honest with you. Do you
Just
get
so
me?
everyone, I did record this, so I'll upload it as soon as this call.
Oh, amazing.
Yeah.
Yeah, look, bro. Here, look, someone said about BTC. I had this marked up and forgot about it. But I'm just going to show you how this gets respected time and time again. Like, look. Close below, we dumped. Revisited, dumped again. Close below, revisited, dumped again. Revisited, dumped again. Like, bro, you could use this on any pair. And these ain't no small moves, bro. Like, when we had a candle close and a revisit, these are big plays. Do you know how much this is? This is 2,100 pips. These ain't small plays. So even if you had a small account and you did one lot, bro, you're making 2 bags off of that. Like, it's crazy. It's like it's not a joke. Like, this could work on anything. Like, honestly, this could work on anything. To be honest with you. But yes, ladies and gents, man, I'm gonna end it here. I hope you lot enjoyed it, bro. I hope you lot could take something from it. I hope everyone could yeah, someone said, can you combine it with unintentional movements. Yeah, man, like that's what I was saying. Like, don't sway away from your original strategy. All you're doing is adding this as an extra confluence. You're not swaying away from your coaches, your bosses, your liquidity sweeps, your direction of, you know, your trends or whatever. You're doing exactly what you would do. You're just adding levels, and this is what institutions trade off, levels. So why wouldn't you want to add that to your bias? Do you know what I'm saying? But yeah, man, that's me. That's me. I'm done. So look, thank you lot for tuning in.
Thank you.
If you lot would like me to host any more eventually, I will do, man. I'm all about sharing and giving back, bro. So I appreciate you lot, man. And hopefully someone's take a few gems from what I've taught today. Assalamu alaikum, everyone.
Faisal,
Take care.
yo, if anyone wants the video, just message Faisal.
What?
Yeah, just I was going to say, if because I don't know how Yerimi will take it, so if anyone wants the video, just send me a DM on the Discord, and then I'll just send you the link directly instead of posting it on the general chat, because it might take a little long if you get what I'm saying.
No, of course. No, I appreciate you lot, though, man. Thank you lot all for tuning in, man. God bless, man. Have a good night, yeah? Take care.